What if I told you that the world you live in runs on something that isn't even real? What if I told you that every shop you enter, every salary you earn, every loan you take is part of a system designed centuries ago? A system so powerful and so silent that most people live their entire lives without ever understanding it? Here's the mystery. Why does a simple piece of paper, or even a number on a screen, have the power to control everything from food prices to job opportunities? Welcome to the hidden world of money and credit, a world we are all part of, but almost no one stops to question. Today, we're going to uncover the truth behind money, how it evolved, and how credit became one of the most dangerous, yet necessary, forces in modern economics. Stay till the end, because once you understand this cycle, the entire world starts to make sense. Long before banks existed, long before governments printed currency, people relied on something completely different. Not coins, not paper notes, not digital payments, just barter. But barter had a fatal flaw, one that would eventually force humanity to invent money. A flaw so simple yet so destructive that it nearly brought all trade to a stop. And that flaw leads us into the first chapter of our story. Imagine two people. One has rice, the other has cloth. Both want to trade. But what if the person with cloth doesn't want rice today? Trade collapses. This is a problem called double coincidence of wants. Barter depended entirely on luck. So society created something extraordinary, a medium that everyone accepted, from shells to metal coins to stamped gold and silver. Money became the first universal tool of trust. But here's the twist. Money itself has no value. Its power comes from our belief in it, a belief supported by government authority. And that belief is what allows the next system to exist, a system far more dangerous. Credit. Credit began with simple borrowing, a farmer needing seeds, a trader needing time. But then banks realized something revolutionary. People rarely withdraw all their money at once. So banks started lending more money than they actually had. This became fractional reserve banking, the engine behind modern credit. It increased prosperity, helped businesses grow, built homes, created jobs. But like every engine, it had a breaking point. What happens when people borrow too much? What happens when banks lend too freely? History answers this brutally. Every financial crisis, from the Great Depression to 2008 and every collapse in between, began with credit expanding too fast. People borrowed more than they could repay. Banks trusted more than they could handle, and the entire system crashed. But here's the biggest shock. Even in the 2020s, more than 70% of global money is created not by governments, but by banks giving out loans. Yes, money is created every time someone takes credit, which means money isn't printed, it's promised. Fallout, the consequences we still feel. When loans go bad, banks freeze lending, businesses shrink, unemployment rises, savings lose value, economies slow down, people panic, governments intervene. But most fixes only treat the symptoms, not the cause. Failed fixes, why we keep repeating the cycle. Governments try everything. Lowering interest rates, printing more currency, offering relief loans, injecting liquidity. But these so-called solutions often lead to even more borrowing, even more debt, and eventually another crisis, because credit fuels growth. But too much credit destroys it, and the cycle repeats. Look around today. More digital payments than ever. People using credit cards for everyday expenses. Students relying on educational loans. Small businesses surviving on credit lines. Governments borrowing trillions. Global debt has crossed $300 trillion, the highest in human history. The same cycle that began centuries ago is now moving faster than ever. So what does this all mean for you? Here are 3 simple takeaways. 1. Money is trust. It works only because society agrees it works. 2. Credit is powerful but dangerous. It can create opportunity and crisis. 3. Understanding money protects you. People who don't understand credit become trapped by it. And here's the warning. The money credit cycle will repeat again. It always does. The question is, will you be prepared or caught off guard? If you want deeper breakdowns of money, banking, global debt, and financial cycles, make sure to like, subscribe, and turn on notifications, because the next video may reveal the part of the system that schools never taught you.